And welcome back to Ask a Nerd, where we take real questions from real operators building the future of insurance.
No fluff, just straight answers from people who've done it.
Okay. All right. Today's question comes from David in Palm Springs, and he writes, I'm building a new MGA. Some people say I should buy a policy admin system to get started. Others say I should build my own so I'm not stuck later. What's the right call?
We get this all the time. David, you're not alone. This is a big fork in the road. So most MGA operators, when you're starting a new MGA, you think about building, but they think about it from a tech perspective, but it's really a business question of
They do think about it as a tech question, but it really does come down to business because it's around intellectual property. But as we discussed before, it's around opportunity costs. It's around time, actually making a product, time actually getting to market.
effectively, when you think about this, it's what is my differentiator as a business? And if your differentiator is to be able to sell policies compliantly, any insurance company needs to be able to do that. That is a given right. That is not going to
Table stakes.
help your company sell for a higher multiple because you have that. So in essence of go to market for a brand new MGU program business, whatever delegated authority underwriter. Like when you think about this, you need speed to market because you need distribution. You do need some level of tech, regardless if you buy or build, but effectively we think you should license. And then you need capacity. And those are some of the core elements of funding, of course, is going to get you there. But these are like the building blocks of what you need to do to go live. So every second that you're not live is
opportunity cost. Yeah. In so many different ways, market share, revenue, branding, eyes in front of investors. Like there's so much missed time. I want to bring up one aspect of this, which is control. I thought about the control. We had talked about control before, and if you're just a firm where it's like, we love our tech, we love the vision that we're going for, we really want the control in the situation. But you had explained to me, it's faux control. Like you don't actually really have control, especially in those early stages. Talk about like that part of it.
So where I was going with this is I was saying there's like there's this different life cycles of an MGMG, right? And so when you have different life cycles, it's the first tranche is just getting to market. And in the beginning, it's what am I actually writing and how many states am I in? Because you may find that what you begin isn't where you need to go.
Yeah.
And so what will get you to where you need to go isn't going to get you to where you want to go. So why are you building for something where you don't know kind of all the ins and outs? You don't know exactly how your rater is going to look. You don't know all the products that you're going to write. You don't know if you're going to need multiple capacity in terms of a coverage recommendation engine. So when you think about this from the very get-go, you should think about what is going to get me to where I want to go as fast as possible and efficiently. Some people want to be as cheap as possible, and there's some trade-offs there. We can talk about that at another point. But effectively, when you think about this, it's how do I get to market, create a product, and then learn from that system, and then figure out what you like and don't like about it. And then if the right choice for you is then to build, at least you have a canvas and you have a blueprint of what that looks like. Now, policy conversions are not for the faint of heart, but if you have so few policy volume, maybe that's a choice that you're willing to make. It's a trade-off.
Yeah, you explained it in such a way that I had not thought about it, which is that we don't know what states we're going to be in. We don't even know like the depth of the product. And it's, do you want to be responsible for building and maintaining something that most likely you're going to have to scrap and rebuild anyways? So why not do it on someone else's dime, right, for the first couple of years? Then you actually know. We know where we're going to be. We know roughly what we're going to do. And now you can set some more firm requirements down. Whereas like on day one, you don't have any requirements really. You're just guessing.
Right. So like I have worked with a number of teams that have built. I've worked with a number of teams that have bought. I've worked with stages of companies that are MGA, that are brand new. They've raised $2 million, want to go live with the product in less than 6 months. I've worked with different inflection points within this value chain. And what I tend to find is that you want a system that has modern public forward-facing, well-documented APIs, true SaaS, true cloud. And those are table stakes. You need a rater that is version controlled. So as an underwriter, that should be something that is very important for you. You should definitively know how a policy was priced at a given point in time, and that might look different than the next month on a next rater version. Do you want to talk about any other underwriting, what you require in a system? What should an underwriter look for?
I'm going to speak from the specialty market.
Yep.
Okay. So I think in the traditional markets where there are raters, I think the guidelines are, and the workflow is, I don't want to say set in stone, but it definitely follows a specific pattern of this needs to be done, then this needs to be done, then this needs to be done. I think specialty is more interesting. And I think for a lot of MGAs, they start out in the specialty space. And for me, I think what is a necessity is you have lots of parallel activities happening all at the same time. So you need some mechanism to get a data or submission into your system. And then that needs to quickly be stored and then chopped up, because we need to get a geocode. We need to run a particular model. So it has to be the ability to go out to other third-party tools, models, cat models, geocoders, data enrichment tools, something like a hazard hub. Go in, enrich it. Is what they said this property, is that what there really is? So Michelle, there's a lot of activity going out, and then that has to be pulled back in and then coordinated and organized before it even gets to some kind of rating or pricing element of it. So for me, I think what an underwriter is likely to want or need is flexibility.
I think that's a great framework to think about it. If I were to think about this from a technical product launch, regardless if you buy or build, when you think about a policy admin system, so a policy admin system is defined as having 5 specific components or like modules that make the policy. And so that is the quoting engine, the rating engine, the policy lifecycle, the data carrier reporting, and form segment generation. So if you think about the policy life cycle, so it has to come in through a customer journey. We might call it customer journey, quote flow, questionnaire. There's different nomenclature for how you get a submission in. And effectively, when you think about this, there's 4 different types of connection inbound. And so when we look at that, it's API distribution endpoints, you have embedded, you have D2C, and you have broker flow. Okay, so you get the submission, it comes in, and right away, you need to be looking at it. Does it fit my risk appetite eligibility clearance? And that's what a quoting engine does. And so that is a quoting engine, a quote state machine. We are looking at this to say, do we like this, yes or no? And in order to achieve this, we need to ping third-party data sources, and we should be using a CRM. And that's what the best in class players do. Now, do you need to do that all on day one? You need to definitively be able to have a quoting engine that looks at risk clearance, appetite guidelines. You do need these functions.
I think it's a critically important function to not stress both your technology but also your team out. So that's where I think there's some business functions that are required on the underwriting team to decide, like, how can we quickly disqualify something? You want to be able to say no as quickly as possible.
So I'll use this phrase that sometimes I use amongst the youth. And it's, do I want to swipe right on this risk or not? And
I like that.
If I want to swipe right on this risk, swiping right means it's a yes, we'd like to continue. We'd like to price for this risk exposure.
For the non-youth.
I felt like that's a disqualifier amongst a certain age group, but that was not meant to be that way at all. But where I come back is the quoting engine and the rating engine have to work in tandem. So they're tightly coupled. And so if I am the quoting engine and I'm saying, yes, I'm interested in this risk, the rating engine's responsibility is then to provide a rate. So that's amongst all of the available capacity partners that you work with. And so if there's available rates, it's going to return that response and it's going to say, if yes, this is what we will definitively rate it at. But the problem/opportunity is that we get into straight through processing, manual issuance, we get into technical premium, if it's derived, we get into this aspect of we need to calculate base premium regardless if it's human or human intensive or if it's some sort of automated black box rating algorithm.
To me, I think there are 2 critical functions of what underwriting is supposed to do. You just named one of them, which is to be the ability to take an exposure, determine the risk associated with that exposure, and then come up with some sort of quantification of that risk so that you can price it. I think another aspect of what's going to need to get built is ultimately, though, you're not judged on those individual ones. You're judged on all of the individual ones that you accept into a portfolio. So I think another critical aspect that, especially in this day and age, when we're talking about digital tools, is the marginal contribution. So I swipe right, but I already have a harem, right? So I already have a portfolio. What's this going to contribute? What's the marginal contribution of this to my portfolio? So if I'm running, let's say, because I know about a catastrophe business and I already have a Florida portfolio, a new Florida exposure is going to impact lots of things.
Sure.
It's going to impact the portfolio metrics. It's going to impact potential reinsurance costs. And that's all part and parcel. Like that, in terms of pricing, I need to know what that marginal contribution is because I need to charge for it. If it's a North Dakota, let's say I have a heavy Florida book and it's a North Dakota location, there may not be any portfolio aspect for it. So just there's a diversification element to it. So there needs to be in these tools, in these going out to third-party vendors or whatever, but its own inability to essentially calculate on the fly, what's this new risk mean? Now, in isolation, that's relatively straightforward to do. But when you're talking about think scale, where you have one coming in after the other,
It's very dynamic.
you're going to have to create an algorithm because you could have lots of quotes out that you might be reserving capacity for that might not get used. And all of a sudden you're running into bottlenecks of capacity because you have so much deal flow coming in, which is always a good problem to have, but it creates other issues that from a technology standpoint need to be mapped out early on.
I would argue that this is an area where it can create IP and it can be a bit of a differentiator to have these rules. And so what I would say is that is not a component of a base policy admin system. So when I talk about a base policy admin system, I'm delineating that it's not including an underwriting workbench. So it may have capabilities and features to notify brokers and underwriters to be able to have that dialogue. And it may happen in platform. It may happen by email. It might happen in a variety of mechanisms of what that's transpiring. But I think that there's specific functions within that where it's a little bit gray in terms of some policy admin systems do a little bit of that. But if you want this muscle to flex, that's something where you should emphasize spending time in determining what you actually want in a tool to be an underwriting cockpit. Because when you have an underwriting cockpit where you can say, this is the risk that I have, and this is where I should spend my time and energy on these risks. Because
so you're talking about building versus buying. It's like that's where you start having to. I think a lot of early stage MGAs or folks that are early in this process are probably thinking that the underwriting workbench is part of a policy administration system. And I know some firms are trying to make that happen, but in all actuality, for most of the MGA firms, MGU firms, program admins, like that is probably an area where you can actually create an asset, create some intellectual property. And what is the decision-making around that?
And even if you know those rules and you know where you want to go with that, is that something you want to share with your policy admin system who then may share that with the next MGA? So this is where it gets into strategy IP. It's what do you want to protect? What do you care about? And how do you grow this? Because you need this to scale efficiently. And so in the beginning, in the early days, it's how do I nail the business that's coming in the door in a responsive amount of time, and I'm able to go to market in a reasonable amount of time.
Yeah. I would say most folks that have made the decision, we're going to start an MGA, likely think that whatever it is that they're doing on the underwriting side is special. And we don't actually know if it's special, but if it is special, now you have things in place where it's like the decision-making around that. So essentially, if you think of the workflow and how, the yes-no decisions, right now that becomes very specific to what you're looking for, what you're trying to accomplish. And there is the ability to begin differentiating what it is that you're doing. And so I think that's important because I went into this conversation not thinking about the underwriting workbench, but those are separate areas. And likely if you're thinking about building, you might want to lean on the
Building.
actual underwriting related pieces and the more non-differentiatable core platform stuff
The
like
chassis.
forms. You can essentially buy that everywhere, and you probably want to do that in the early days because you don't want to be wasting a lot of time design thinking that part.
I'll tell you, I flew to Serbia the day of the Russian invasion in Ukraine to teach engineers, software engineers, how to build a quote state machine, because there's something around versioning. There's something around, let's say, out of sequence endorsements. Engineers, right off the bat, definitively don't understand all of the nuance and complexity of insurance, and mapping out that policy life cycle. Sure, we have ChatGPT. Things are easier now than they were, but it's still, is that the best use of your engineer's time?
I think we've now 360 this thing, because I think we're all the way back to it. It really does. It's a business decision, and it really comes down to you should only build things, especially in those early days, that have the ability to be some sort of intellectual property. Otherwise, you're wasting some time and effort, and it may feel like you have that time because you could be trying to raise capacity. It might feel like you have that time, but you actually don't. You'll quickly realize, oh, I should have been working on something else and focusing all of my effort on building this thing.
So I'm going to play devil's advocate.
Okay.
I think that the case that I'll make for somebody building is when it's parametric, it's lightweight, and they can think about a policy where if you don't have to provide a certificate of insurance, if you don't have to do, where it's very transaction based. I'm not saying that you don't
The
have
parametric.
I'm saying, let's say you buy an airline.
warranty.
You buy an airline flight.
Okay.
You live in Florida. You traveled to New York, and when you
Travel insurance.
so when you bought travel, I didn't buy,
The rate online was too high.
so you didn't buy travel insurance.
Yep.
Had you though, that may have been a candidate for something lightweight. They don't have all the same needs as a property that's in a cat-exposed area. It's just...
For those that are listening, I think you'd be very surprised, even building the chassis part of it, these are solved problems. I think you would be surprised, for a new person coming in, how much code you would have to write in order to do that correctly.
Yes, I simply was making the argument that if I was going to build, it would be under the pretense that it was a simple product that had very nominal life cycle events.
It's not a car chassis, it's a scooter. Well, much more simplified, and it's like...
It doesn't have endorsements. What's the endorsement? You stay for an extra day? That's so lightweight. It's so nominal.
How about this? How about the decision making around when to build is when you have a lot of binary decisions. It's either yes, no, and there's no follow-up, no further. So no endorsements, no certificate of insurance. Right. There's very few forms that are required.
You bought the rental car, you didn't buy the rental. You got the rental car.
It's a 1 minute. It's a 1 minute decision, and it's easy underwriting, and you can get to a terminal point in the transaction. That seems relatively straightforward, where you don't need why would you need a sophisticated big chassis
I have
to be able to manage that?
They have standard rates that don't even have, where they don't manage the policy themselves, where the landlord will manage this. And in that case, there's standard rates. It's yes or no, and if yes, this is the price.
Yeah.
And it's on a per month, per day, per year. It's very standardized. And in that case, it feels, if you're going to build, that's when you would.
And most likely, because that's a smaller market share, you're likely not to find a lot of Insurtech companies that are making solutions for that, because it does require your own decision making. It doesn't have the standard feel and approach around forms and rating.
Are no joke, because the European market's different, but in the U.S. market,
state by state,
Yeah, I mean, you have a deck page, so it's a declarations page. You have a general terms and conditions, and you have state mandatory and filings of forms. And for each of those, the nuance and complexity, unless you just need to some ISO forms,
But even
there's
then, like
still dynamic aspects about it.
they're still dynamic. You still have to version control those over time.
Yes,
Like
100%.
that becomes problematic.
So I'm going to ask you, you worked at MGA, and when you were there, the team collectively decided to build.
Yep.
And do you want to just tell me about what that experience was like?
I think part of the experience is we were venture funded, so we didn't have a big pot of gold to dip into. So we went through an extensive due diligence process, matrix and everything. What we ended up finding was it was really difficult to differentiate one policy admin system from the other. Everyone said the same things. They sold the same way. We got the demo on meeting 2 or 3. We got the pricing the meeting after that. Everyone felt right around the same. So we whittled down the decision to like, what is it that we're trying to do? And even then it was just like, it was still a 6-figure trigger.
You used 2 words earlier today. You said, we came up with the 2 that were the most.
It's the safest and the cheapest option.
That made me laugh because I experience this as an analyst firm. I have this all the time. Shameless plug. Do you want to explain how we connected in the first place? How you saw my writings?
Because you did an analyst study on policy administration systems.
Which is freely available. It's fincher.us/research. You can go there and you can find out everything I know about some policy admin systems.
And I had come off of doing those evaluations. And I was like, how did you get all of this information? This is more information than we as the prospect were able to put together. You had more information around that, which would have been like incredibly helpful to have that in making that decision. But what the light bulb moment for me came after this MGA when I was consulting and doing the exact same process for other MGAs. And we would always, and it wasn't even just policy admin systems. It was any sort of big technology spend. It kept falling. What fell through the cracks was we're struggling to differentiate these firms. They all sound the same. They're all selling the same. So how do we make a decision? It kept coming down to the safest decision and the cheapest decision, right? For my MGA, the cheapest decision still was not cheap enough. Like it still was a big chunk of the amount of money that we raised, the amount of capital that we had, and we had still not gone live. So this was like a big, huge investment where we hadn't even sold the policy yet. So there was, I think, a feeling that we have time. So we might as well build it. In hindsight, that was probably, I don't think it was the best decision in the world just because it's like, we didn't talk about this. Once you build it,
maintain it.
You own it. And the maintenance on these things is massive. It's much bigger than you think because that system has to evolve with the new technology over time as well. And so you need a product manager, you need developers for that. The forms and the other things inside are constantly changing. So the maintenance itself is considerable. It is not like you build it and you have a years of runway where you get to use it. That's not the case at all. So in hindsight, like because of the maintenance element, that became a problem.
Yeah. So some of the things I find in legacy policy admin systems that become burdensome, and here's how you know that you're ready to evaluate other options, is how long does it take you to launch the next state? If you're able to go live in the next state, how much work is that intensive for your team if you buy, build, or you're already on a system? That's a question you should ask yourself, because that is a framework for the delivery of new features and functionality that you need. And this is the growth and expansion of your ability to distribute.
Yeah. So it's good. That's going to be a different answer, whether you're dealing with more admitted type products versus specialty. Because I think in the specialty, geez, the state that you're operating in, other than like the mandatory forms, is almost irrelevant. you should be able to move quickly. That should be part of your value proposition, is you can move quickly. On the admitted side, you have the additional burden of getting rates and forms approved. There's more of a hurdle that you have to jump over. And I think you bring up a really good example, because I think that's one thing. The chassis is already built. So most of the firms that are dealing in the Insurtech firms that are dealing in these core policy administration systems and platforms, that's part of the functionality that they've inserted in is, hey, once we have the templated original state or states, it should not be too much of a burden to jump from a technology standpoint to jump. Like, you may have the burden of getting things approved, but in parallel, getting that state up and running should be relatively quick.
So I'll compare this. Have you ever built a home? Have
No.
you ever? Okay. So my mother once was able to buy a brand new home, and she was able to go ahead and she picked out the floor plan, and then she had selections of countertops. But if you selected quartz countertops, you had 4 selection of quartz. You didn't have 180,000 selection of countertops. And I think there's something around buying a policy admin system. When I talk about buying, and we're really talking about licensing. And so when you license a policy admin system, there are specific blueprints of people who have come before you that have a specific
the course.
framework. And for better, for worse, they're trying to route you to that. Do you want agency bill? Do you want direct bill? Do you want both? Like, they've worked with different players,
Hundreds.
different vendors, different workflows, different flavors. And they do have opinions about what good looks like.
Absolutely.
So do you need 4 options for your countertops, or do you need 180,000?
So that's why, from an underwriting standpoint, that's why I think you don't. But you need flexibility,
Yes.
because there could be, in your particular system, just that one odd curveball that's non-standard to the way anyone's doing something, like your secret sauce that needs to be either injected in or whatever. So I think what's critical is that these core systems have the capability of, whether through API or some other technology, data can come in and out, right? So if you need to detour in one stage and take data out and then quickly inject it back in, the system has the capability of being able to do that. I think ultimately flexibility is the key.
Configurability.
Configurability.
I think it's
around it.
configurability. So I think about this as individual modules and units. They're like Legos, they're building blocks, and they need to be able to work and play nicely with each other. Because today you're launching with one program in a handful of states, and this is your go-to-market. But very quickly, you will find, if you write this business and you can expand, you're going to have more states, more programs, more capacity, and it's just going to then be adding additional rooms onto your house. And so you need to definitely think about the end in mind. And so when you think about this, working with an off-the-shelf configurable policy admin system that has laid the blueprint of other teams who have scaled is, I think, more efficient use of your team's time and your dollars spent than to build and then to keep building, because you actually don't know the amalgamation of where you're heading.
Yeah. I'm going to add one other thing. I think we've beat this dead horse.
I know.
But I think one other thing is, I'm curious around like product managers around this. Like, I think it's critical. I think what happens a lot of times is you have the CTO who becomes the product manager on something like this. And I think you really need someone from a product management standpoint that understands like how products are built, both from an insurance standpoint and from a technology standpoint, and can balance what's needed for both. Because there needs to be oxygen for both of those sides of the equation. And I've seen too many situations where, because this MGA is coming in and they are digitally savvy and there's probably a technology bent, they feel as though they can build everything. And I think what I'm hoping people get out of this is, no, not only do you not want to build anything, it's dangerous to have that attitude around building stuff. So when you do decide to do something, I would say you'd want separated out from the pure technologists who feel as though they're like they have an S on their chest and they can build everything, and get it to someone that's product oriented and thinks of these in terms of products and go-to-market strategies and things like that versus like just the technical challenge of I want to build technology. I think it's just very dangerous for MGAs to think of building technology unless it creates some sort of intellectual property.
What's your value proposition? What do you stand for as a company?
Yeah.
Where do you want to head?
Yeah.
Great.
So,
Thank you, Nick. This has been good.
yeah. Until next time, ask the nerds.
Ask the nerds.
Okay. Till next time.